Ever dreamed of owning a home in the USA? That classic white picket fence, the big backyard. It's the American dream, right? But let's get real for a second. How much money do you actually need to make that dream come true? It's not just about the sticker price of the house. There's a whole world of costs that can sneak up on you. Today, we're going to break it all down, step by step, so you can figure out what it truly takes to buy a house in the United States. We'll cover everything from the down payment to those sneaky hidden costs. And by the end of this video, you'll have a much clearer picture of your own path to home ownership. First things first, let's talk about the big one, buying the house. The initial hurdle for most people is the down payment. For a long time, the gold standard was 20%. So, for a $400,000 house, that's an $80,000 down payment. That's a huge amount of cash to save up. The good news is, you don't always need 20%. There are programs like FHA loans that allow you to put down as little as 3.5%. Conventional loans might require 3% or 5%. But here's the catch. If you put down less than 20%, you'll almost certainly have to pay something called private mortgage insurance, or PMI. This is an extra fee added to your monthly mortgage payment that protects the lender, not you, in case you can't pay. It can add hundreds of dollars to your monthly bill until you've built up enough equity in your home. So, a lower down payment gets you in the door faster, but it costs you more in the long run. Now, where you buy is just as important as how you buy. Location, location, location. It is not just a cliche. It's the #1 rule in real estate. Once you have a house and a location in mind, it's time to talk about the mortgage. This is the loan you get from a bank to cover the cost of the house that your down payment does on. Your monthly mortgage payment is made up of 4 parts, often called PITI. Principal, interest, taxes, and insurance. Principal is the amount you borrowed, and interest is the fee the bank charges you for borrowing it. Your interest rate makes a huge difference. A 1% difference on a $400,000 loan can change your monthly payment by a couple $100s and cost you tens of thousands over the life of the loan. Your credit score is the key to getting a good interest rate. The higher your score, the less risky you look to lenders, and the lower your interest rate will be. A good rule of thumb many financial advisors use is the 28-36 rule. This means your total housing costs, your PITI, shouldn't be more than 28% of your gross monthly income, and your total debt, including your mortgage, car loans, and credit cards, shouldn't be more than 36%. Let's dig deeper into one of the sneakiest parts of PITI, property taxes. This is a tax you pay to your local government based on the assessed value of your property, and it never goes away. Even after you've paid off your mortgage completely, you will still be paying property taxes for as long as you own the home. The rates vary dramatically from state to state and even from county to county. For example, New Jersey has some of the highest property taxes in the country, where you might pay over 2% of your home's value every year. On a $500,000 house, that's $10,000 a year, or over $800 a month, just in Tashi. On the other hand, a state like Hawaii has very low property tax rates. When you're browsing for homes online, most listings will show an estimate of the annual property taxes. Don't ignore this number. It is a major part of your monthly housing expense and can make an otherwise affordable-looking house completely out of your budget. Another huge factor, especially for families, is the quality of the local schools. A great school district can significantly increase the value of homes in that area. People are willing to pay a premium to get their kids into good public schools, which can save them a fortune in private school tuition. This creates a high demand for a limited supply of houses, driving prices up. You might find 2 nearly identical houses just a few miles apart, but if one is in a top-rated school district and the other isn't, the price difference could be $100,000 or more. Websites like Great Schools or Gorniche.com are fantastic resources for checking school ratings. Even if you don't have kids and don't plan to, buying in a good school district is a smart investment. It helps your property maintain its value and makes it much easier to sell in the future because there will always be families looking to move into that area. Finally, let's talk about something that's priceless: security. Feeling safe in your own home and neighborhood is non-negotiable. This is another factor that heavily influences home prices. Neighborhoods with low crime rates, community watch programs, and a strong sense of community are highly desirable. Before you fall in love with a house, spend some time in the neighborhood. Drive around at different times of the day and on the weekend. Do you see people out walking their dogs, kids playing in parks? Talk to potential neighbors if you can, and ask them how they like living there. You can also look up local crime statistics online through your local police department's website or other third-party sites. A safer neighborhood often comes with a higher price tag, but the peace of mind it provides is something many buyers are willing to pay for. It's an essential part of what makes a house feel like a home. So, let's bring it all together. How much salary do you need? It's not a simple answer. Let's imagine a hypothetical scenario. You want to buy a $400,000 house. But wait, we're not done. We haven't even talked about closing costs, which can be 2% to 5% of the purchase price. On our $400,000 house, that's another $8,000 to $20,000 you need in cash at closing. And what about maintenance? A good rule is to budget 1% of your home's value per year for repairs and upkeep. For a $400,000 house, that's $4,000 a year, or about $333 a month. The water heater will eventually break. The roof will eventually need replacing. These are not ifs, they are whens. And don't forget, furnishing your new home, paying for utilities, and maybe HOA fees if you're in a planned community. As you can see, the salary required is so much more than just what the mortgage calculator tells you. It's about affording the entire lifestyle of a homeowner. You need a stable income, a healthy savings account for emergencies, and a realistic budget that accounts for all these variables. Buying a house is a massive financial and emotional decision, but it can also be one of the most rewarding experiences of your life. The key is to go into it with your eyes wide open. Do your research, save diligently, and be honest with yourself about what you can truly afford. Don't stretch yourself so thin that you become house poor, where all your money goes into your house and you have nothing left to enjoy life. Talk to a financial advisor. Get pre-approved for a mortgage to see what you qualify for, and never be afraid to walk away from a deal that doesn't feel right. It might take time, and the path might be different for everyone. But with careful planning, the American dream of homeownership can absolutely be within your reach. Thank you so much for watching. I hope this breakdown was helpful and gave you a clearer understanding of what it takes to buy a house in the USA. If you got some value from this video, please hit that like button and consider subscribing for more content on personal finance and real estate. Drop a comment below with your own questions or experiences. I'd love to hear from you. See you in the next video.